Could you please tell us what you think about investment into second or two-tier cities at the moment in Poland? Are you seeing interest on behalf of the investors?
We're generally seeing interest from investors in all cities. Clearly, there is a huge appetite for primary products as always. However, in the last few years, we have been observing a trend of very intense interest and search for assets in secondary cities. Obviously, there are much smaller and in a different format, but investors are very keen to spend money and actually put together portfolios of smaller assets that certainly make sense for them in the longer term. However, having said that, clearly the development pipeline has been growing, and increasingly, and I think Agnieszka will dwell on that, increasingly we've seen more development in smaller cities, secondary cities as well as tertiary cities in Poland, in order to certainly create this type of assets for investors to acquire.
Okay. What kind of assets do you see currently of interest in Poland?
There are various trends. Primarily is certainly the best assets, but investors are not necessarily able to buy them because they are not on the market, very simply. Hence, they have to look at and certainly gear towards the secondary type assets in either regional cities or the second tier cities, or obviously smaller locations. But equally, they are also looking for distressed type of retail assets in various locations throughout Poland. There is quite a substantial flow of money into the Polish market, and big appetite for distressed assets where investors are certainly looking to either add value by very intensive asset management and also via modernization, remodeling. That is definitely a growing trend in our market.
Agnieszka, would you please share with us some of the trends that you feel are shaping the future of retail in Poland?
Of course, after the 20 years of rapid development, the retail Polish market started to be mature. We have more than 11 million square meters of retail space, but half of this space means 5.5 million square meters was delivered before 2005. What does it mean? It means that the modernization and remodeling of the shopping centers starts to be a very important trend from one side. From another side, this is the large opportunity for the investors also. Because of changing shopping habits, for example, we can observe the decreasing role of the hypermarkets. And we should remember that those shopping centers, majority of them, this is the shopping center of first and second generation, was anchored by the hypermarkets of even 20,000 square meters. So this is the huge challenge for the owners and investors to change this space, not only the quality of the space, but the specialization of the shopping center on this first and second generation. Another trend is diversification, and we can talk about diversification of the formats of the shopping center, as well as about the geographical diversification. Because of 70% of the retail space under construction and actually is located in the relatively small cities of less than 100,000 inhabitants from one side, but it means also that we can talk about the totally different formats, obviously about the smaller formats of the shopping centers, but also about the convenience shopping centers. This is the very growing trend on the market because we can talk about even 100% of growing space year comparing to the previous year.
Okay. Thank you very much for your time.
Thank you.
Have a wonderful mapping.
And yourself. Thank you very much.
Thank you very much.